bring on board Mr. Subramaniakumar, who is the MD and CEO at RBL Bank, to talk about the earnings gone by. Thank you so much for taking time out. Let's start off by talking about that loan growth, because that has been healthy. Do you think that we can see this loan growth rate continuing to grow? What's the target for FY24?
Just to set the context to you, I would like to recall that when we just met a year before or 9 months before, I was just telling them that our intention is to grow the credit to the tune of around 15% and retail to the tune of around 20% on an annualized basis. So we have just exited the year, rather the annual growth for retail was 21% and annualized growth itself is 24%. Sequentially, we did around 8%. And overall credit growth has been 17%. This was primarily triggered by 3 different strategic changes which we did, our approach, we planned it out in the last 1 year. Going forward, that will continue to be play out. One, we said, we will try to play to our strength of credit card and microfinance. Microfinance was not at all taking off in earlier years. Now we have started moving up. So that grew around 25-26% than what the quarter on quarter, and ultimately from negative growth of 36% is now come to the positive territory. Second was a credit card which continues to grow at around 24%, which we are year on year. Addition to that, we have moved our wholesale book to the commercial book, the corporate book and commercial book. We said that we'll balance it. We'll have a better growth in commercial banking. Commercial book also show a growth of around 19%. And housing loan, LAP loan, and few other retail products, we said we'll be launching it. Two-wheeler, our vehicle finance, rural vehicle finance. Rural vehicle finance touched the milestone of 1,000 crores. And the commercial, our housing loan has really trended well with 88% because low base. It is not fair to tell about the statistics. But what is interesting to see is that housing loan, LAP, both put together was able to give me an 806 crores of last month growth. That is one. The second, housing loan per se itself has grown by 900 crores in last quarter. So these things will continue. In addition to that, we will have a two-wheeler, used car four-wheeler, then we will be having gold loan, we will be having educational loan, we will be having an SME loan. We are coming with the BBG, that's a business loan. All these things are in the form of being underway now, and it may start delivering from Q2 onwards. With all these things, we are gaining around 20% growth is the minimum what we are looking at. We will be able to grow 20 plus, which in the retail will grow around 25%, and overall growth will be around 20% in advances.
Hi, sir. This is Anish also joining in the conversation. Your credit costs are at 1.5% for FY23, and in Q4 it was 0.29%. What kind of credit costs are you targeting on the incremental book, and what is going to be the normalized run rate going forward?
See, if we just look back for the credit cost, we had it, our intention is only one. When we are going for the retail as well as the credit card, high risk one. We start the day with the collection, end the day with the collection, in between do the business. This is the model we have been working on. So when I do that particular activity, the primary focus is to arrest the slippage. That is the primary focus. We have a very strong monitoring team. Apart from having a good underwriting team also. So what we last quarter, we closed it with around credit cost of 29 bips. The previous quarter was 39 bips. And the entire year, the credit cost was 149 bips. If you recall that we said in the beginning of the year that our credit cost will be less than 50% of what we did in the previous year. In fact, we did much below that. So going forward, we will continue to do around 1.5 to 2% because you can't go below that the level of 29 bips what we have done it now. So the intention is to hold it there. At the maximum, we will be in the range of 1.5% to 2% credit cost going forward. That's one. The second, when we are talking about this, we have made the recovery of our technically written off accounts. That is also one of the big focus we have brought into the bank. So last year, that's the year which we concluded now, we were able to make a recovery of 103 crores, which also brought down my provision requirement by 103 crores. Going forward, that is also going to be the big focus for the bank for recovering out of the technically written off account. That's otherwise 100% provided accounts.
And take us through what the outlook is on your recoveries going down the line. What number could that be at for FY24?
What we have achieved now, and it will be definitely 10-20% more than what we have been doing it.
Okay, so that was about recoveries, but what about deposit growth? Because that's been strong as well. How should we expect that to move? Because 4% sequential is healthy, but the question is it sustainable?
One important thing I need to tell you is that the space in which we operate, necessarily the differentiator has to be the rate of interest. We are not the giver of the rate, we are the taker of the rate of interest as far as our bank is concerned. Going forward, that is continued to be the one. We will be a differentiator in terms of higher rate of interest, unless otherwise the rate cycle reverses. We will continue to have rate of interest the same range what we have been doing it. If not a higher rate of interest for the FD and other things, we will continue to incur our high cost for the deposit, because all the deposits are already locked or locked up in the current rate of 7.8% plus. So these rate of interest, it is going to catch up. It is not going to reduce even if the rate cycle reverses. So we will continue to be increasing our cost of deposit by around 30, 40 bips will be the one which will be the increase as far as next year is concerned. However, this is not a great concern for us, and it may not impact our NIM for the simple reason that we are diversifying our credit portfolio instead of anchoring on three. That's a corporate, credit card, and micro banking. Now we have just gone ahead with so many other retail, which is giving me extra margin which we are missing it out in the corporate. So we will be able to maintain that NIM of around 5% going forward as well.
All right, good to have you on board. Thanks so much for taking time out and joining in. That's the management highlighting the road ahead, also talking about how they are looking at a PAT of about 2,600 crore rupees. They are looking to expand their branches, and 2.6 lakh crores of business is what the management is looking to clock in.